Good afternoon, everyone. Welcome today's webinar on investor relations. Atikilt will start, our moderator Atikilt will start the conversation with Rob and Paul, who are investor relations experts. Go ahead, Atikilt.
Thank you, Lilani. Hello and welcome, everyone. I am Atikilt, General Counsel and Company Secretary of Ethiopian Securities Exchange. On behalf of ESX, I would like to extend our heartfelt thanks to our distinguished speakers and all of you who have joined us today for this discussion on the role of investor relations in Ethiopia's emerging capital markets. The primary objective of this session is to create awareness about the importance of investor relations as a key driver of transparency, trust, and effective communication between listed companies and investors in Ethiopia's emerging market. And also to encourage companies preparing for listing or fundraising to establish a structured investor relations functions that enhance their investor engagement. Most of you might know that in the past, the commercial code required companies to make limited annual disclosures. However, under the Ethiopian Capital Market Authority's Public Offering and Trading of Securities Directive, and as well as under ESX rule books, public companies are now expected to go beyond basic compliance and provide more comprehensive and timely disclosure. And beyond the regulatory obligations, companies must also strengthen their communication with investors to build trust and attract continued investment. When we come to the ESX today, we have 2 listed companies on ESX, and in the coming few months, we expect more listings. So with this context in mind, we're delighted to have a panel with us today, Rob Stangroom and Paul Reynolds, to share their insights and experiences in investor relations, and to discuss how Ethiopian companies can enhance their investor relations function to meet the evolving market expectation. I will now invite our panelists to introduce themselves, share their professional background, and explain their connection to investor relations. I'll start with Rob and then Paul.
Thank you, Atikilt. Thank you, Lilani. Thank you for the honor of being able to present to everybody today. My name's Rob Stangroom. I'm CEO of African Financials. I'm a qualified accountant, and I had the honor of being the first secretary and first stockbroker in the establishment of the Malawi Stock Exchange back in 1994. And the economic situation there was challenging at the time. And in fact, in the first 2 years, we didn't have any listings. And so I was dedicated myself to improving visibility and awareness of the stock market in Malawi, pretty much the same in the same role as the ESX is doing at the moment, but in a much smaller scale. As secretary to the exchange, I became very familiar with the laws and stock exchange rules across the African continent, and as the first stockbroker, I participated in a few listings as sponsoring broker once I left the exchange. Thereafter, I joined a capital markets advisory group called Amara, formerly Robert Fleming, and I then carried out half a dozen plus investor IPOs on behalf of listed companies in East Africa, as well as the role completed. I then established African Financials, assistance in communicating responsibly with the market. And this was at a time when digital was coming to the fore, high levels of growth digitally, and basically be doing the same thing for the last 20 years, which is helping listed companies communicate responsibly online. My team we have 25 listed companies, clients that we help. Their market capitalization is above 4.5 billion US dollars, and we operate in 3 markets. Our biggest challenge at the moment is to help companies deal with the significant challenges of digital communications, and tying that in with compliance and best practice. So that's my background. Thank you. Over to you, Paul.
Thanks, Rob. Yep. Thank you. And thank you to ESX for having us here. We appreciate the efforts that are being made by both the regulator and the exchange to promote best practice across different parts of the capital markets ecosystem, not least of which is investor relations. My name is Paul Reynolds. I live in Sarbet, Addis Ababa. I've been here for 10 years. I graduated a long time ago as a chemist, but went immediately into investment banking. And so for the last 30 years or so, I've been advising governments, government-owned companies, regulators, stock exchanges, companies large and small, on strategic sort of financial matters, corporate finance, generally, mergers and acquisitions, capital markets transactions. I've been involved as lead advisor on 250 capital markets transactions, worth about $150 billion, ranging from straight debt instruments to structured debt instruments, convertibles, exchangeables, and equity issues, rights issues, IPOs, and things like that. Primarily advising issuers on how to approach the market, how to prepare for the market, and indeed how to optimize their relationship with both current and future investors. I'm currently still a senior advisor at a firm called Rothschild. I'm a partner at a firm called Renew Capital, based in Addis Ababa. I'm also chairman of Zuri Capital, which is a corporate finance business which has just been licensed. And I'm chairman of Pragma Capital, which is an Ethiopian investment bank, which is hopefully will be an investment bank once it's licensed in a few months' time. That's a little bit from me. Back to you, Atikilt. Thank you.
Thank you very much, Rob and Paul. Maybe before we proceed to the session, I just wanted to remind our audience to leave their questions in the chat box. And by the end of the session, we will collect and direct them to our panelists. So maybe let's start with the basics. Rob, could you help us define what investor relations means in the context of public companies, and also what are its main functions? And maybe then, Paul, perhaps you could add how these functions might differ across various contexts.
Thank you, Atikilt. Going back to basics, when a company goes public, its management is separate from the ownership of the company, and this creates legal obligations or common law obligations of the managers of the company towards the shareholders. And these obligations, which are called fiduciary duties, basically there's 2 fiduciary duties that the management owes to the shareholders. The first is to enable those shareholders in a public company to trade their shares, and that is what a stock exchange listing provides, the ability to buy and sell their shares. Secondly, the obligation is for the board to enable those shareholders to trade their shares at a fair price, which is described as protection of shareholder value. So the investor relations in the context of public companies is the overall responsibility of the board to act in the best interest of the shareholders in carrying out the strategy and the overall objectives of the company, and that is to enable investment, to protect the company's reputation and act in their best interests. And you could summarize this as risk management, although it goes beyond that. So there is a definition of investor relations, which I will share with you, and this is a formal definition, which is doesn't seem to be on my screen. I will. Can you see that definition? Is it possible to see the definition?
Yes.
Great.
I can see it.
So this is the formal definition of investor relations in the modern day. And you'll see how complex it is because it integrates finance, communication, sustainability, compliance to deliver clear, timely, and secure two-way digital communications to meet directors' fiduciary duties in a digital-first world, meeting common law obligations, broadening stakeholder inclusion, driving fair valuation, and enhancing access to capital through trust, loyalty, and a great reputation online. The three key elements here are finance, compliance, and communications. So it's a complex practice to implement on an ongoing basis, and that's because there's many companies are of different sizes and they have different contexts in the manner in which they operate. Paul, your insight onto the definitions.
Yes, thanks, Rob. And, as someone who's spent a bit of time trying to elevate thinking around investor relations, I agree with you that it's important to say up front that it's a complex, multifaceted task, which goes beyond simply communication. So the definition that we tend to use is that investor relations is the strategic management responsibility that integrates finance, comms, marketing, and regulatory rules and compliance in order to enable the most effective two-way communication between a company and the financial community, and ultimately contributing to a company's securities achieving fair value. In our minds, typically, there is the contentious element here is around the balance between telling a story and being compliant, both with the letter and spirit of the regulatory environment, as well as market practice as it develops. And then equally, the discussion about fair value, because often owners, particularly as they move from being sole owners or one of a few number of owners of a company and become a reasonably small proportion of the common equity holdings of the company, they need to sort of shift their mindset, or rather the culture of the organization needs to shift its mindset away from maximizing value, which is still a good thing, but to treat it as in the sense of fair value. Because ultimately, and we'll talk about this later, the relationship between a company and its shareholders or stakeholders, but shareholders in particular in this case, is a long-term relationship. And so achieving fair value is often a debated but important objective of the role of the company. Equally, as people start becoming effective as financial communicators, they will recognize that the stakeholders that they need to communicate with will extend beyond simply the shareholders to, for example, potential future shareholders, people who they may not think very much about at the moment. And then beyond that, obviously, into the balance of the ecosystem. So investors, institutional and retail investors, investment managers, intermediaries such as analysts, equity analysts, fixed income analysts in future, rating analysts, brokers, market makers, etc., and also the media, both uninformed and uninformed. So I think this is the two elements of the definition that I sort of stress most beyond compliance are one, the long-term relationship nature of stakeholder management. It's a two-way process, and also the complexity of the external ecosystem which falls to be managed. But I'll stop there and hand back to the moderator.
Thank you both. Maybe building on that, Paul, why is investor relations considered such a critical function for companies participating in or preparing to enter the capital market? Maybe Rob, please feel free to complement Paul's points afterwards.
Sure, thank you.
Yes, thank you. And it comes as no surprise that I consider, and many of us consider, investor relations activity as a critical strategic activity, and not least because when raising capital, there are so many different facets to it. The price of a company obviously is one of them, but the truth of the matter is, and the reason why it's so important to do it well, is because, like with many other resources that we need for success, now there is and this might sound overly dramatic, but I think it's true, that there is a war for capital on a global, continental, regional, and now in Ethiopia, a national level. And it's that mindset which will differentiate average companies from sort of the leading companies, from great companies. Across the world, institutions and retail investors are increasingly mobile and global in their perspective. I know this is something for the future in Ethiopia, but even if foreign capital isn't immediately coming to Ethiopia, the conduct and practices of investment management at the global level will come sooner than perhaps the capital does. And so in the sense that when you're thinking about a company as a supplier or as a client or as a lender, or in this case as a potential investor from the investor's perspective, you're looking for differentiators, things that make one company different from another, arguably better than the others. And in doing that, almost whatever sort of technique you use to determine how you're going to invest and where you're going to invest and how much you're going to invest, you almost inevitably make comparative observations between one company and another, whether or not they're listed, to be honest. And so as an issuer, it's important to have to attribute strategic value to the role of extending the strategic differentiation between you as an issuer and every other issuer in your market, as well as in future potentially other investment opportunities around the planet. And in order to do that, one needs to be intentional and invest in developing an effective function. Because ultimately, if capital comes more easily to you, then from a liquidity perspective, you're able to access more capital more readily and on better terms. And that's sort of the real driver. If you are an effective investor relations representative of your company, then the chances are that you not only do you make the access to that capital easier, but you also reduce its cost. And in order to add value, obviously the return on how you use the money, it needs to be greater than the cost of capital. So driving down the cost of capital in the business is critical for long-term economic value added and profitability, net profitability. And in precisely the same way as individual companies compete for capital in this war for capital, so do individual markets. It's less obvious perhaps, but Ethiopia in future will be competing for capital into its capital market for its strategic objectives of funding the development of the country and providing dignified careers and livelihoods for 140 million Ethiopians. So in exactly the same way that a company is competing for capital, so is a country in due course. And therefore, it's not just about whether or not my company is presenting itself well in order to access that capital more easily and more cheaply. It's also about the contribution I make to whether my market is able to access that capital more readily and more cheaply. So why is it important? I think it's incredibly important to remember that the outside of the company itself, outside of this market, there are already a number of analysts and investors thinking about where they can find value, where they can find exceptional returns. And interestingly, when we were in the past, I've been a non-executive board member of the Investor Relations Society of South Africa, and I remain the Chairman Emeritus of the Middle East Investor Relations Society, which I set up with a number of others in 2008. Interestingly, when we were doing the research to build the Middle East Investor Relations Society, we spoke to a whole bunch of investors across the planet. And I'll never forget one saying to me, we don't like investor relations as a profession, and we don't like investor relations societies or associations as professional associations in given markets, because the better that an issuer becomes, the better a market becomes in delivering transparent, consistent, effective financial communication to its stakeholders, the less darkness there is, the more light there is. And the more light there is, the fairer the valuation of these listed securities. Whereas in the dark, we can do a lot of work to find undervalued securities and create exceptional returns for our stakeholders, which really, for me, illustrated in practice why it's so important to invest in developing an investor relations function, an investor relations profession, to protect the cost of capital and the access to capital, not just for companies, but also for the economy as a whole and our market here in Ethiopia in particular. I'll stop there. Rob, do you want to add anything?
Thanks, Paul. From my perspective, I've been involved in a number of privatization IPOs. And one thing that stands out, it's a critical function because IPOs enable the empowerment of citizens to actually share in the growth of the economy. And I think this is at a critical stage in Ethiopia's growth as a country. And whichever way you look at it, you're taking money from the general public. Companies are taking money from the general public, and you absolutely need the confidence of the general public in order to do that. Not only when you take the money, but continually thereafter. And it's interesting to see the growth of the investor relations function in the United States. After the Second World War, only 4% of Americans owned shares in listed companies, and that has risen from 4% now to plus or minus 58, 59%, and they've become extremely wealthy in being able to invest. And so for me, my experience has been basically, look, it's all about confidence in the company at the time that the money is invested in the company, and thereafter. That needs a formal framework, and that's what investor relations provides. Atikilt.
Thank you both. Maybe Rob, I want to build on that. And considering Ethiopia's developing capital market, how can investor relations help bridge the information gap between issuers and investors?
Paul pointed out the two-way secure communications channel between listed companies and their investors. And I've realized that there's one thing that listed companies can do, and regulators can do, and all stakeholders can do, and that is to put the information needs of investors first. Understand where the investor is coming from, whether it's a retail investor, institutional, foreign, local, it doesn't matter. They are investing for a reason, and in exchange for that investment, they want to be communicated with responsibly, and they want a reasonable return on their investment, and they want to be able to trade their shares. They also want to be treated equally. Every shareholder is equal in the name of the law. And it's taken us ages to work out exactly what the framework to actually to define what investors want. But there's the GRI, the Global Reporting Initiative, the GRI standards of reporting, which sets out the basic standards that a company should comply with, should conform with when dealing with those investors. And so these principles are set out in this document, which we will share after the presentation, but there needs to be a formal framework. Investors wish to be included in the communications of the company and the future of the company. They want to know everything that is significant in their investment decision. They want complete information that's contextual, that's well balanced, and they want to receive that information in a timely manner. And that's quite challenging in the digital arena, because everybody's distracted on various other platforms. They want reliable communication from the company that's accurate and clear. And they want to be able to compare companies across within the local market and internationally. And they obviously want to be able to know, they want to know that that information that they're dealing with is verifiable. And they want to be able to find that information easily. It should be visible to them. And then the company should analyze all of these, the application of these principles on an ongoing basis. So the investor relations function on a practical day-to-day basis touches on every single one of these principles. And this is secondary to listening to what investors want. And I think that all too often in many markets, everybody forgets that it's about the investors, about what they want. And they also forget that it's the creation of wealth is through listed companies, and they're the most important channel. So I think the formalization of the communications functions through IR bridges all the gaps if all of these principles are complied with.
Thank you, Rob. Maybe for our audience, please feel free to put your questions in the chat box, and we will address them at the end of this section. I mean, now that we have covered what investor relations is and its importance, I think it's good to move to what the role of the different stakeholders are. So maybe for Rob, could you outline the key responsibilities of an investor relations officer in a listed or in a soon-to-be listed company?
Okay, thank you. Absolutely. There's one single overriding objective of the investor relations officer, which that officer will be acting on the instructions of the board under a strategy. And that is to ensure that the IPO is a success for everybody, for the investors, for the listed companies, and not only upon the listing of the company, but thereafter. And again, I think that too many transactions view IPOs as a conflict, as an opportunity to take money from the general public and invest it without due regard for balanced stakeholder involvement. So this definition of a successful IPO I've formulated over the years, and I won't go through all of the points here, but in the African context, when you have an emerging market coming online for the first time, that the overall objective of ensuring investors are looked after, particularly retail investors, if that is the focus, has to be number one. And for me, that's the role of the investor relations officer. It is obviously, it ties into marketing, it ties into compliance, it ties into responsible project management, media monitoring, all of those good things, but all of those aspects should be and must be carried out underneath an umbrella that the IPO should be a success. And in a new market, that's absolutely critical.
Thank you. Maybe let's move to the role of the board of directors. And for Paul, from a governance perspective, how can the board of directors support and strengthen a company's investor relations effort?
Thank you. Yeah, I'll come at it from sort of two different directions. One is obviously the sort of compliance requirements, the statutory duties of boards of directors in the context of for example, the commercial code in Ethiopia, as well as the rules of the regulator, in particular of the exchange. And then the other direction comes at it from treating it as investor relations as a strategic asset of the business to optimize the long-term relationship with stakeholders, particularly equity holders. Obviously, I think it's reasonably clear that most jurisdictions have, where there are listed securities, have reasonably similar rules which apply. I think there are a number of specific issues which they are intended to address along the way, and I'm not going to go through all of them, but in my mind, the most important one from a compliance perspective is to balance the relationship between the operations of the company and the executive from a communications perspective. I mean, to balance the operations and the executives versus the objectives and of the shareholders, and the board sits right in the middle of those things. In some cases, individual board members represent specific shareholders, although that is in the commercial code and the rules is subordinated to their general responsibility to shareholders as a class. And Rob mentioned treating all shareholders equally, which is an important feature. So at one level, the board needs to ensure that in communicating with its shareholders via its investor relations function, that it isn't doing anything to exacerbate that agency risk, the difference between what the executives in the business want to achieve and how they want to explain it, and the needs of existing investors, whether retail or institutional, to be able to understand the way in which the business works and its objectives and its current operations, financial condition, and things like that. At a more sort of fundamental level, obviously, the board needs to make sure that the governance system is in place to ensure that individuals or groups of individuals are unable or not in a position to take advantage of the capital that's been so generously provided by the current shareholders. So that agency risk, that conflict of interest, which is sort of common across discussions for companies generally, is obviously more acute in a listed company environment, because the chances are, one, from a shareholder value perspective, the regulators will be watching more closely, and there will be more opportunity for them to perceive differences in application of both the codes of conduct and the general market practices, and as well as the legislative requirements and regulatory requirements. But as importantly in that, the board needs to make sure that its investor relations activity is obviously entirely compliant with the requirements, not just that they comply at some point in time, but comply on a timely basis. So if you look at and in particular for listed companies, the sort of ongoing disclosure requirements and other related rules, there's a reasonably complex set of requirements for listed companies, which obviously need to be understood completely by the board and by those responsible for delivering on those obligations on a timely basis. And so leaving, for example, the publication of annual reports or semi-annual accounts, audited or unaudited, or quarterly updates, audited or unaudited, to leaving those as an operational matter, for example, is likely to lead to trouble. Equally, the board should insist on investor relations strategy, so that it is clear what the objectives of its financial communication approach is, and it should calibrate and intentionally decide what information it provides to the market and to all shareholders equally, and how that is expressed. Because if the strategy for investor relations, and that's a medium to long-term strategy, isn't clear, then it's difficult to respond to problems in the meantime. So the board should insist that there is an investor relations strategy, however brief it might be. It needs to be there as a basis, as a framework from which then, not just to explain what the company is about to the outside world, but also to manage the internal reporting and compliance requirements. And the other element from the board perspective is that board members probably need to, again, recalibrate the mental approach that they take to communicating with the outside world, because if they don't, it'll make the role of the investor relations team incredibly difficult. So, and I'm going to exaggerate a little bit for effect, but from a marketing communications perspective, we often say, do not let the truth get in the way of a good story. But from a and then of course, we can debate whether that leads to long-term trust and long-term relationships. But certainly from a financial reporting and investor relations perspective, we have to be very clear about the regulatory requirements. We have to be very clear about the way investors behave. Investors do not respond well to discovering that what they were told yesterday in an investor call was simply not true, or was an exaggeration, or was misleading by omission. So that sort of approach to how you develop the equity story and narrate the equity story requires intentional consideration at the board level, so that then the executives in the investor relations function and the finance team and the corporate finance team know how they're supposed to explain every aspect of the business and what they're not supposed to talk about or should avoid talking about. And the final point I'd make is that, and again, this is something which we need to develop more here in Ethiopia, but ultimately the board is the owner of the financial model for the business. And so when you think about what will happen in a capital market, particularly an equity market going forward, in a couple of years, there will be a number of analysts who have their own model of the company, a financial model which goes out 5, 7, 13 years, depending on the discount rate for your discount horizon. And every line item that the company would see in its own report and accounts, in its internal management accounts, and its internal financial model, particularly forecasting model, will be replicated in the models of the analysts. And so if the board doesn't invest in developing a long-term financial model from which it may or may not draw conclusions about fair value of its equity securities, its equity value, you can rest assured that the outside world will do it. And so that final point is comes back to that intentionality and practical aspect. Whilst the board may not develop the model or cross-examine the model, it needs to make sure that a financial model is developed in the business, and it does describe the future of the business in a way which would enable an analyst, if he were ever to, or she were ever to read it, to draw a reasonable conclusion about the fair value, present value, and the potential variation on various assumptions around that. And then the final point I would make about the board, which is sort of a summary point, is that this is a strategic activity. And here in Ethiopia, we tend to sort of underinvest in our finance functions, in our treasury functions. There are very few treasury operations in companies in Ethiopia. And of course, right now, there are very few, if any, investor relations functions. And so it's important that the board, for companies who are expecting or anticipating or planning to list, but also for those who have listed, for the board to be very clear about the strategic importance and value of that function, not just for that company, as I mentioned earlier, but also for the reputation of the market as a whole. I'll stop there, hand back to Rob if he wants to add anything.
Nothing to add, thanks, Paul. I think I'm going to come on to some additional points just now.
Okay, maybe another key governance structure is the management. So Rob, what should management prioritize to ensure transparent and consistent communication with both investors and regulators?
I think whatever the board does, it was going to require a budget. And so that budget needs to be set with a framework in mind relating to the context of the company. And so I think the first thing the company should do is actually define the context of the company, and that is, how big are we as a company? What resources do we have for the communications and the regulatory function overall? Paul talks of engaging with analysts and similar activities, but that requires resources. And I think from what I've seen across African markets, the investor relations function is basically limited to a compliance function. And that's absolutely fine for some companies, because the investor relations function, beyond compliance, it doesn't have much more value to the company. And so this document that I'm sharing now is a framework which companies can use to determine what their context is in the market at the time. For the companies that are listing on the Ethiopian Stock Exchange, their context is going to be quite significant in the overall context of the market, because of the importance of the first few listings, the importance of the success of the first few listings. And so context number one. Number two is, do they have a framework? Do they have minimum standards of their investor relations activities? And so they should prioritize a framework around minimum standards. What is it that they should be doing that everybody else is doing that is compliant in terms of the law? And again, we've formulated over the years 16 standards that companies, very basic, understandable principles and standards that the companies can that should comply with. And so context, compliance, and minimum standards would be, for me, the top three items that management should prioritize.
Thank you, Rob. Maybe I'll stay with you. And I mean, initially, when you were defining investor relations, you mentioned a number of key items, for example, communication, compliance, and finance. So balancing compliance with positive communication can be a bit tricky. So how can investor relations officer strike that balance effectively?
I think they can do that by realizing that compliance has to come first, comes before everything else. And secondly, investor relations is not public relations. And it's common to see across many IPOs in our markets, the IPOs being marketed as if they were, as if their products and services were being promoted. So sticking to a framework of the GRI principles of reporting, knowing that the stock exchange rules should be complied with, knowing too that the regulator, if they see any inappropriate communications, has the powers to interject and fine the company. And I think it's the saying "objective, not subjective" is a central theme in investor relations. Tell the story objectively, transparently, whether it's positive news or negative news, and do that consistently with every stakeholder that the company deals with. So PR is not IR. Transparency and obviously treating every investor and stakeholder equally is critical.
Thank you. That's a really good point. Let me go back to Paul, and also focusing on Ethiopia. I mean, what capacity gaps do you see among investor relations professionals, and what steps can be taken to address them?
Thank you. And I think just extending from Rob's last point, if you look at the background of many sort of investor relations professionals in sort of developed, more developed and developed markets, you often find a reasonable proportion of sort of communications, marketing, and PR people, right? So it's not necessarily a role which is reserved for accountants and ex-analysts and sort of financial gurus. There's a huge amount of communication in it. But what I would say, at the risk of sort of repeating what Rob said, is that this, in many jurisdictions, actually, this is a regulated role. I mean, it's certainly regulated activity, and in some places, we encourage, in the Middle East, for example, for investor relations officers to be a mandatory role in equity-listed companies, because fundamentally, compliance comes first, market integrity comes first, the story, both for your country and I guess for the market more generally, comes second. And I think it is a useful point to bridge between the direct question you put to Rob and the question now you're putting to me about how here in Ethiopia can we sort of effectively close gaps or perceived gaps anyway, because that's a behavior which issuers all over the world sometimes fall foul of. The compliance elements are in the end become regulated, probably because they're already embedded, they're innate, they're in the DNA of people who are communicating with the market, so they don't think about them so much. The assumption is that all efforts, and no effort, in fact, will be spared towards regulatory compliance for the reasons that we sort of set out before. But the role of the investor relations officer is multifaceted. So in the end, in order to imagining this roadmap from here to a situation where we have 50 plus issuers on the exchange, and we have therefore 50 plus investor relations teams. How do we bridge the different gaps there? I think I don't want to elaborate any more on compliance related stuff. It's mandatory, it's fundamental, it has to be put first. But I would encourage potential issuers and others who are considering a career in this profession to spend the time to become, as we have done in many other jurisdictions, to become sort of effective communicators, telling stories. Because in the end, the practice here of communicating financially or in a regulated way is young and will develop rapidly over time. But as many of you who've seen TEDx talks about investment analysts, how to investing generally, people will typically say that numbers tell a story, and to be an effective communicator, you need to understand the numbers so that you can then tell a story. And so, encouraging individuals who are considering this as a profession or considering companies who are likely to be listed, you have to invest in the substantive understanding of the value, securities evaluation, company evaluation, as well as other broader market dynamics, and invest into your people, so that over this period of 2, 3, 4, 5 years, as you are dwelling on becoming listed. And by the way, the journey between starting to think about being a listed entity is at least 2 years in reality, right? So there's plenty of time to invest into developing the strength of that function. The other side of the coin, coming in from a more market or investor perspective, is that in reality, the value of a company's security is driven obviously by the fundamental forecast cash flows, but as much as anything else, it's driven by market sentiment and the views of individual members of the ecosystem outside of the company and the shareholder base. So I would encourage people to think a little bit differently about how and where and why once they're listed, they will be required to communicate, not just the substance of it, but also who they will be talking to, and to think about what that means. If you imagine most companies, family-owned businesses, government-owned entities, very reluctant to sort of communicate sort of substantively with the outside world. In future, the media, let alone the analysts, as the market grows, as it becomes more of a component of day-to-day sort of discussion, there will be hosts of people who make money or get paid to create stories or buy or sell decisions around listed securities. So imagine how different the world will be in 5 years' time when there's this entire ecosystem of people who only get paid if they come up with an idea which is contrary to prevailing views. Again, it's a mindset question, whether they are buy-side analysts working for companies who will buy shares, or sell-side analysts, the brokers, whether they're rating analysts, or indeed whether they are financial journalists. And so I think it's an important sort of mentality change to become more willing and indeed to set up a systematic approach to engaging with the wider ecosystem over time, but always in a regulatory compliant way. Another aspect which needs to sort of develop, I think, is the investment into the reports and accounts and the reporting processes. I think one of the drawbacks, one of the challenges we'll have here is the consistency of the quality of reporting. And so we need to sort of, again, from a mentality perspective, invest in the functionality of producing meaningful management accounts and audited accounts in a way that really explain to the outside world, not entirely, because there's always going to be additional context required, but it explains better to the outside world what the company does and how it's likely to be valued. And I think we've got a long way to go to develop an accounting and auditing and financial advisory profession which enables companies with confidence to communicate today, because in a month's time or in 6 months' time or 12 months' time, that information is highly likely to be, the information that we communicate today is highly likely to be suspect. And it's difficult to get that done quickly. It takes time and effort to build the resources into the financial reporting systems, because the analysts will tear it apart, okay, and the brokers will tear it apart, and the rating agencies and the media in the end will tear it apart. So if you don't invest in managing those elements of the external ecosystem, then it will come back to bite your integrity and your reputation, and ultimately, therefore, the discount applied to your perceived future cash flows by those who are valuing securities. And then the final sort of point that I'd make is when it comes to communicating with authorities, regulators, tax authorities, we here in Ethiopia we've been limited in what we need to communicate externally, right? But going forward, the exchange will require a company, if listed, to communicate at least semi-annually, probably, and on a very timely basis. So, main board companies have to get their accounts out quickly, and the process for doing that is complicated and rarely. I mean, I don't know what the average duration of the time between year end and the publication of accounts is. I really don't know that number, but I'm guessing it's in the order of years rather than months, probably at the moment. So we all have to become much more adept at quick closes, then making whatever regulatory sort of disclosures are required at that moment in time, and then the accounts come out later. And related to that, within this last point is, we're not accustomed to sort of regular, effective communication, and essentially that's the guts of this story, which is, in order for the market to be an attractive market, our companies need to be attractive investments, and a very material element of that is the consistency and regularity and substantiveness of the communication that we have with the outside world. And these can all be bridged. And I think one of obviously the work that you guys are doing at the exchange, that's also at the ECMA, as well as other academy initiatives, for example, the universities and other players in the ecosystem are rapidly trying to develop capacity for financial system ecosystem players. But at the same time, I think specifically with respect to investor relations, and if you imagine what Rob has been describing is a fraction of what really needs to be discussed as you prepare to list your securities and as you then face ongoing continuing obligations. But I think what we can do, I think, and what's been successful in many other jurisdictions is to develop this sense of community amongst investor relations professionals, so that the investor relations people in the market, not only do the exchange and the regulators, but also the professionals in the market are incentivized to improve the caliber of investor relations activity, the depth of it, the consistency of it. And so they, as a profession, as more and more people join the profession, they can more rapidly educate others, more effectively sort of communicate the principles upon which this ultimately regulated activity, and therefore perhaps in future regulated roles, take on. So I think a lot of work in capacity development can be taken on by the market itself, and in other jurisdictions, sometimes these professional associations become self-regulating organizations. And I think that's something which most markets over the long term will see as a sort of sensible approach. In the meantime, here in Ethiopia, I think we're starting small, we're starting slow, and I think everything that is already being done is effective in bringing attention to the different skills and expertise that will be needed for this market to be deemed to be investable, not just by foreign investors, but also by local Ethiopian investors. So yeah, I'll wrap up there, hand it back. Maybe Rob has some additional points to make.
Thank you very much, Paul. Maybe to add on that, I mean, initially I have stated that we only have 2 listings, but we expect more listings to come in the next few months. So for Rob, for companies preparing to access the capital market, what foundational steps should they take to establish an investor relation function? And also, Paul, please feel free to add from your perspective at the end.
Thank you, Atikilt. I think from my perspective, just concentrate on the big picture items. Boards really have to recognize that establishing the investor relations function, it takes time. It's complex, it's risky, it's multidisciplinary, and it's probably the single most important event in the company that could occur. And so it might be quite disconcerting from the company starting out as a listed company, starting the journey as a listed company, but they must know that amongst the accounting profession, auditing, the advisors, the legal profession, the learning curve can be incredibly quick to establishing a modern investor relations function. That said, there's no better way than actually doing it, and over time they will become they'll become familiar with what is required. And so my foundational steps are be 110% aware of what you're getting into and get proper advice from all quarters, and that should enable companies to mitigate most of the risks associated with selling their shares to the market.
Paul, do you have anything to add?
Sure, thank you. Yeah, I think, as Rob suggested, an IPO or even a listing is a sort of seminal moment in the history of a company. If you've seen the way people analyze or describe companies, and they have this sort of a graph of activities and outcomes over time, the IPO will be the most significant aspect of it. It's not a mechanical process. I mean, there are a bunch of mechanical aspects to the process, and I think there are a lot of places one can go to sort of read about those sorts of things. So what we sort of typically stress from an equity capital markets advisory perspective is that it's really a mindset change in the company. And if you've decided to IPO, you should be able to explain to anyone asking the question why you did it, right? Even that decision, before you even become a public company, why are you becoming a public company? What's in it for you or your stakeholders? Now, clearly, there are obvious reasons why an entity may want to sell a company that it owns and do that by way of an introduction or a listing or indeed an IPO. But what that tells you, if when you ask that question and you listen to the answer, it tells you a lot about the sort of the strategy and the mentality of the ongoing business, right? Or it can do if you don't think about it carefully. So the first point we'd make it really is that think very hard about why you're doing this. And of course, there may be one obvious reason, but why is this in the interests of ongoing shareholders for this company to be listed, for this company to be on an exchange, for its securities to be publicly traded, criticized and debated in the public domain, away from the control of maybe the largest shareholder or indeed the other shareholders or its board or management. You lose control of the measure of the company because the equity price and more importantly, the discussion around equity price will be passing judgment on the operational success and the financial success of the company. Number two, and I think we've touched on these before. I mean, preparation for an IPO it involves changes in a number of activities in an organization. The obvious ones being timely, accurate financial reporting from an investor relations perspective, going a little bit further, arranging to communicate in a two-way way as a bridge between the company and its financial stakeholders, particularly its sort of equity interests. And as the investor relations, therefore, activity needs to be seen as something which is strategic and valuable and will ultimately reduce cost of capital and increase your capacity to win the war for capital itself. But then at a more sort of operational level, how accustomed is the company to describing and then explaining its compensation structure, not just for the board, which becomes mandatory, but when analysts start asking questions about the cost structure of the organization, the unit cost build-up for its products or whatever it might be. And so companies need to be prepared for that level of disclosure, because even though it's not required from a regulatory perspective necessarily, although a lot of that detail might end up in a great prospectus, when analysts are asking questions, they've already read the prospectus, they've read other analyst reports, they've read what the company's put out about itself, and they're looking for other angles to create a differentiated proposition for their clients, to find reasons to create a sell note or a buy note for their clients. And so that sort of level of disclosure, the granularity of the discussion always within the rules, is an important change. And so when a company's thinking about that, it needs to spend a lot of time and effort in a sort of change management sense, addressing culture. And that's my final point in terms of preparation generally, is that the culture of the firm as a government-owned entity or a family-owned entity is highly likely to change when it becomes a public entity. And as we all know, culture eats strategy for breakfast. And so fundamentally within an organization that's moving from private non-disclosure to public and a lot of disclosure, some of it mandated by law, the whole organizational culture has to adapt so that it can be effective in so doing. I'll stop there and hand back to you or Rob.
Thank you both. Rob, I mean, based on our previous discussions, where should the investor relations function ideally sit within an organization? Should it be under finance, corporate communication, or as a standalone department?
That's such a good question. The answer is corporate governance. And of course, the challenge with the investor relations function is that it involves marketing, it involves compliance, it involves legal, but in fact, it's all of those things, and they all have to tie together and work together. The investor relations, you will not see, in my experience across our markets, even with relatively larger companies, you don't see investor relations departments as standalone departments. They are typically made up of marketing, ICT, and the company secretary. So it has to sit within the highest level corporate governance function, and in that regard, it's under the purview of the company secretary, who then advises the board of issues related to investor relations, and available to the company secretary will be advisors, the legal fraternity, externally or internally. Much depends on the context of the company, how big they are, what budget they can apply to the communications function. We have some large listed companies that have basically don't have an investor relations department. It's just about compliance, and so that compliance consists of preparing the accounts and submitting them to the exchange, and not much else. So that's the finance function. So it's quite variable. You don't have the standardization of the IR function across organizations like you do in Europe or the United States.
Or do you have anything to add?
Yeah, I mean, I think the distinction I'm going to make will really be, I mean, I'm not disagreeing with what Rob says for small companies, early stage markets, or as a result of budgetary constraints. But obviously, sort of to relegate, I use that word deliberately, an investor relations function to a sort of compliance activity, I think certainly in the longer term, profoundly disables both issuers and markets to differentiate themselves in the war for capital. So if you look at Europe or the US and Asia, many parts of developed Asia and developing Asia, there's a significant investment in distinct investor relations teams. And even here in Africa, as I mentioned earlier, I wasn't until recently on the board of the IR Society in South Africa. There are a significant number of listed companies with distinct investor relations functions. Some have chosen, and I think quite rightly, to merge their treasury teams with their investor relations teams, and they tend to live. And also in Nigeria, I think we have a number of examples there. If you look at the Dangote IPO, for example, and others. Anyway, so maybe in future then, to avoid sort of getting into a boxing match, but in future, as our capacity evolves, as our market becomes bigger and hopefully liquid and accessible, and of course, the value of investor relations is really a function of how effectively the market's operating. So if the market's not operating well, then there's a limit to how much an expensive investor relations officer can really do to change the cost of capital or its relationship with investors. But if we are hoping to build a world-class market in what might be the second largest economy on the continent, then I think we should have a higher vision, at least, of where these things go. And I think from a vision perspective, typically, we would hope at least that the investor relations function is closely associated with the CEO and the CFO. They support these guys when they're out on the road, talking to people all the time, making sure that they're saying the right things in the right way, with the compliance mindset sort of behind them, but also encouraging them to stick to the script. We have an equity story. It's compelling and it's inspirational, but it's true. And also in the event that they come across difficult questions or there are problems, encouraging the CEO and the CFO to answer these questions honestly, because anticipating problems and explaining them to investors, particularly significant investors either on or off register, is a way of developing trust and reducing cost of capital. But from a functionality perspective, where they sit in the organization, they sort of, in larger markets, they will sit inside what we call corporate finance teams, which might be part of Treasury or part of the CFO's team. But as Rob said, they always have very strong relationships with marketing and PR and compliance with company secretarial, various sort of government elements, as well as the operations of the business. So one of the things we haven't touched on here is the importance of the IRO to explain just not just the financial aspects, but the operational aspects. And clearly, you can always, the investor relations officer can always wheel out the head of Division 1 and the head of Division 2 to talk to material potential investors or investors about the detail of their business. But the investor relations officer obviously needs to be able to do that reasonably effectively themselves. And so it becomes increasingly a sort of corporate finance element. So most of the investor relations teams that I've worked with over the years sit within the CFO's team, often within a corporate finance team within it. And there's also the issue about the model. So I mean, who owns the model inside a company? Who owns the financial model for the business? And clearly the board are responsible for it, but typically these sit inside the corporate finance teams who also develop strategy. And it's an important sort of element that we haven't touched on very much now, which is there's a whole bunch of reporting and explaining the present and the past, but there's also, particularly in terms of valuation, when we talk about modeling and forecasting, there's a whole bunch of art as well as science in describing in a regulatory compliant way what the sort of future of the business looks like from an operational and then ultimately a financial perspective. And it's within a corporate finance team environment in a larger company that you'd often find the tools and the experience and expertise to do that effectively and consistently. But like Rob says, I think as we're starting, it's probably the investor relations functionality, because ultimately the sort of cheapest to deliver effective investor relations is that which is regulatory compliant, and it probably will therefore sit within the corporate governance structure and around the company's sort of secretarial, shareholder register, those sorts of things. But I would just encourage people to think bigger and to imagine a time when we have a massive capital market which does the job it's meant to do. It's liquid and accessible for a variety of different issuers. And it will be because we are communicating effectively, truthfully, transparently, consistently with all stakeholders across the market. I would say in future, perhaps we will see an investor relations function which is strategic and sits separately, but within the CFO or corporate finance team. I'll stop there. Thank you.
Thank you. For Rob, I have two questions, especially for smaller and newly listed companies. What strategies can help build a cost-effective yet impactful investor relations capability? And also, how can technology and digital platforms enhance the investor relations communication and reporting practices?
Thanks, Atikilt. I'm just going to share this diagram here, and basically how newly listed companies and smaller companies can build a cost-effective IR function is to put digital first. Digital, if structured correctly, can carry out 90% of the requirements of responsible communication between a company and its investors as well as stakeholders. The cost of digital communications has fallen so dramatically over the last 5 to 10 years that it's almost negligible, the cost of communicating responsibly online through various digital channels. It's almost negligible. Cost should not be an issue when implementing an IR strategy for the first time. What is critical is knowing exactly what to do, how to centralize, integrate, and automate all the activities associated with communication, which is your content origination, your content publication, the distribution of the content, the engagement with stakeholders on a daily basis, and and analyzing how effective that is. And if you get all of those elements correct, then what happens is the company will naturally grow a dedicated audience, and that audience is absolutely critical for visibility of your investor messaging, and the ability to keep the investment public informed, and build a relationship with them so that they trust you as a company and that they're loyal to you as a company. I'm going to share this this slide, which is a company called Copperbelt Energy Limited, and this we have 15 years of historical information on the growth of the digital audience of this company. So one key thing to bear in mind is, in the communications function, things take time. If you're going to build people's trust online, it's going to take a lot of time, and that is illustrated here from Copperbelt Energy. So you'll see that their social channels started in 2014. They already had a website from 2011, and that community has now grown to close to 190,000 stakeholders as well as investors. And the growth of that community has enabled the company to double their shareholder size, and that meets sustainability objectives, providing inclusivity and empowering Zambian investors. So there's hard evidence out there that digital is absolutely the way to go. Obviously, there's challenges associated with AI at the moment, managing misinformation, and digital can meet that So sort out the basics first, and the basics are complete modern website, investor relations website, communicating directly with the market, and then a content strategy, which Paul has spoken of, understanding what it needs to be said to the market, and when. So that's my recommendation on what newly listed companies should do to build a cost-effective yet impactful IR strategy.
Thank you, Rob. Maybe
Can I just ask
Yes,
a question? So when you talk about when we're communicating via using digital mechanisms, we're not just talking about existing shareholders, right? We're talking about the ecosystem outside.
Absolutely. Copperbelt Energy has 10,000 shareholders, and their community is 190,000 large.
Right.
Yeah.
Which may well be analysts or journalists or whoever it might be.
Yeah.
And then the other point I'd make, again, as a question of courtesy, often people say, oh, well, face-to-face interaction is important. I want to understand, the character of the CEO and the CFO and the head of the operations. But there's a digital solution to that as well, right? Because there are videos and interviews, podcasts, and again, that comes a little bit more over to comms and PR. But the point is that it actually can be very cost effective, and I would encourage everyone who's thinking about this to reach out to Rob and speak specifically about how to do this in a comprehensive and cost effective way, because ultimately it's the basis from which then you can start to really build meaningful long-term relationships. And when I did this as a boy, obviously we didn't have any of this. It's extraordinary what can be done now, and the cost of it. So yeah, thank you.
Thank you. The last question from my end is for Paul. So during challenging periods or market volatility, how can companies proactively manage investor expectations and maintain credibility?
Yes, so crisis management, whether it's issuer related or market related. So I think we both alluded to this a couple of times, and the fundamental currency to manage through turbulence is trust. And so I think we need to get into a habit of talking about what might go wrong and explaining what plans we have in place to address them. We need to get into a habit of making announcements and following them up with more direct communications if it's substantive or likely to be surprising to our stakeholders, particularly our existing shareholders and possibly potential shareholders. But when the shit hits the fan, if it's to do with the company, that's one thing. If it's market related, then that's something completely different. And what companies who have effective investor relations experience is less volatility during times of market volatility. So there are a number of different studies across different time periods which show that effective investor relations reduces your cost of capital by between 2 and 5%. Conversely, increases the price of your securities by up to 20% in liquid effective markets. And the reason that's important is because when things are going wrong, then your investors sort of have two sort of gut responses, right? And potential investors. Is this an opportunity for me? Yes or no, right? The market may be volatile. Your share price may be volatile. Is this an opportunity for me? Yes or no? If I understand the company because there's an effective investor relationship between me and the company, then I can form a view on that. And I can, when I speak to the IR or when the IRO calls me, then what he or she is saying, I will take more or less at face value. If I have no relationship with the company, if I have no with an investor relations officer or CFO or CEO or whoever it is that sort of handles me as an investor or potential investor or an external financial stakeholder, then when news flow comes, there's nothing I can do about it other than to follow the market. I may have a slightly sophisticated approach than that, but I have no reason to believe this company is going to be any different from others, right? So when it comes to sort of crisis management, 99% of being able to deal with it effectively, particularly when it's market related, is to have already built trust with your investors, right? So when they ask questions and you tell them your take on the market, of course, you need to have an internal system. When the shit hits the fan, you'll have an internal discussion. You'll form a view on what needs to be said. You have a strategy for investor relations generally. So within that, you have crisis response activity. So you're not reinventing wheels. You're just determining the messaging that you want to deliver, what's important for the market to hear from you today. And of course, it may not be issuer specific. It may well be a more general market observation. But nevertheless, when I speak to you, if I trust you, if you tell me the truth in the past, if you tell me that things might go wrong and how you deal with them, and they did go wrong and you dealt with them that way, then when you tell me how you're going to deal with this, I'm far more likely to believe you. And that sort of leads into the company-specific issue. So if you have a crisis at the company, whether it's perception or real, actual, then what are you going to do about it becomes the most important question on the mind of everyone in the market, and particularly your potential actual and potential equity investors and the analysts. So if you have a track record of dealing with problems transparently and obviously in a timely way, then when you come and talk about what's happening now, this particular crisis, then they'll probably give you the benefit of the doubt. Now, most people working in financial markets know that bad news comes in three. And so, if there's one bit of bad news or two bits of bad news, they're still going to be waiting for that third bit of bad news, which is going to exacerbate the problems and turn them into sort of really dramatic valuation and liquidity or solvency issues. But at least they will listen to you. So when you have a company-specific problem, and obviously there's a whole bunch of compliance around this in terms of when these things get to market. But you will probably, if you do have a problem as a company, you will probably have thought about it. You'll have advisors on board. You won't have made any specific decisions which are disclosable yet, but you'll have a range of alternatives. And subject to the compliance and price sensitive information and insider dealing and all that kind of stuff, the chances are that you will be able to talk to your major shareholders and major potential shareholders as soon as the announcement is made and explain to them what you're going to do to deal with this crisis. And of course, if there's zero track record of communication, and effectively addressing problems in the past, then they're not going to give you much credibility this time round. So I'll stop there. But I think the fundamental issue is build trust before you need to spend it.
Great, thank you. I will start to read some of the questions in the chat box. Maybe the first one.
I'm really sorry. I'm going to have to jump in 3 minutes.
Yes. Rob, you can take it. Can an IR officer participate in or provide investment advisory services on behalf of their affiliated company?
I think if they are cleared by the regulator to provide advisory services, they probably could, but the governance side of it would make sense for them to advise their affiliate companies. Paul, is there an issue of conflict there?
Yeah, I mean, I think no investor relations officer is going to give investment advice to a protected retail investor, but to the extent that they are qualified institutional investors already on the insider list, a bunch of other sort of qualifications, then then they are effectively encouraging anyone they speak to consider seriously buying the shares in this company, right? That's the fundamental purpose, notwithstanding the fair value objective.
It's advice to an affiliate company. So internally, corporate advisory advice.
Sorry, I apologize, I missed that. Yeah, I mean, as long as it's internal and confidential within the company or the group of companies, then I don't see there's an issue there at all. If there's a transaction or there's price-sensitive information, then obviously there are additional sort of compliance issues.
Yeah, and the board might want independent input, independent advice.
Depending on its policy. Yeah.
Yes.
But typically, investor relations officers try not to be the advisor, right? I mean, they provide input and advice, but if you do an IPO, don't do an IPO, that's an investment bank advice, and what's the right price to issue at? That's an investment bank advice. And boards obviously will really try not to make those decisions themselves in isolation, because that creates obviously legal liability, and their advisors have professional indemnity insurance.
The second question is, what specific and strong role should the regulatory authority should do in creating awareness for the mass in relation to investor relations?
Can I say this and jump off?
Yes.
I'm really sorry. I've really got to jump. I've got a car picking me up shortly. I think the single most important thing you can do is this, right? I mean, just raise awareness. I think the next point I would make is that we should, I believe, it's my personal view, we should make a great deal about the investor relations profession or various components of it. We should elevate it to a career choice that people want to make. We should elevate it in the eyes of board members and CFOs who see it as an opportunity to add value, not just to incur an operating expense which is necessary to meet regulatory requirements. And so I think we should really try and encourage both people who've never come to the market before, the potential participants in the ecosystem, whether they're issuers or others, to see investor relations as a value-added activity, not just from a risk reduction and mitigation perspective, but also in terms of telling an effective story. And I think as regulators and exchanges, and in other jurisdictions where I'm on boards of IR societies, exchanges are integral to the activity of the IR societies or associations themselves, because they want to promote the industry and the profession so that it becomes, the market as a whole is deemed to be a great and effective market, in the same way as a company with some strong treasury or strong investor relations, as a symptom of great companies. In a market with a strong investor relations profession, it'll be seen as a symptom of a great or potentially great market. I'll leave it there. And I'm going to have to say thank you very much for having me, and I'm going to jump off now, if that's okay. See you all soon.
Bye, Paul.
Thank you.
Thank you.
So Rob, another question is, how can an investor relations manager accommodate the interest of the management and the shareholders to provide transparent, verifiable information to investors?
Basically, ensuring that the IR officer has a seat at the management table and listens to everything that the investment community is saying. So with modern communications practices, if you have got a progressive modern online presence with a broad community and you're pushing information out to that community reliably, that community is going to wish to engage with you, and that the responses to that engagement on a daily basis should be carried out on a daily basis. And from aggregating that feedback, then the IR officer will become connected with what the expectations from the markets are. Also, having an internal engagement policy with management and the board will enable the IR officer to communicate the overall stakeholder engagement, the issues affecting investors and stakeholders to management and hopefully up to the board. So it's ensuring open communications channels with the general public, but also management realizes how important the IR function is, and if it's strategic, then that IR officer should be able to get a seat in front of the management and the board.
Thank you very much. We're running out of time. So maybe, Rob, two things from your side. How can participants reach you? Maybe if you have an email or a LinkedIn account where people can connect and discuss the issue further. And also, if you have any last minute things you want to say, let me give you the floor.
Thank you very much for this opportunity at Atikilt. Yes, I'm on LinkedIn, Rob Stangroom, pretty simple, and hopefully we will distribute some of the materials that I shared today to everybody online, and my contact details are in there. But if you wish to contact me, it's ceo@africanfinancials.com. Happy to communicate with anybody and everybody about the IR function. One last point, possibly a little bit of a contentious one, talking to the last question, and that is the role of the regulator in market, in educating the market. I think the listed companies need to come first, and it's the listed companies' role through progressive investor relations that should be informing the market, not the regulator. The regulator should be a secondary participant in that overall market development function. This is about listed companies, it's about investors. It's not about the regulators. The regulators should facilitate that.
Thank you very much, Rob, for your time and for the valuable insights you gave us. And also for the audience, thank you very much for joining us. Hope you have taken a few notes that can be used in the future. Until next time, thank you, everyone. Have a lovely day.
Thank you, everybody.
Bye.
Thanks, Lilani. Thanks, Atikilt. Bye.